Hey everybody, this is Jim at SB500chart.com. It is 7:30 on June 11th, 2013. I actually got back a little sooner than I thought I would. I didn't think I was going to be doing this video until 10:30, 11 o'clock. So, and really it's going to be, again, I'm going to keep it pretty brief because just a couple things happened today. And if you're following the videos on an ongoing basis, I feel sometimes like I'm beating a dead horse. So I'm just going to kind of update what's new in the chart. Before I do it, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Hey, let's take a look. Okay, here's a 30-minute chart. What does that mean? It means each candle on this chart took 30 minutes to form. This chart goes back actually to late April, and you can see starting about April 15th actually. There we go. Let's go ahead and just make it. We were in an ascending channel that worked for over a month. And this channel was pretty well defined. Broke down, back tested, and ever since the breakdown we have formed a new descending channel that is defined by these two blue lines. That broke out last week. Broke out actually on Friday of last week. We got our bounce right where we were expecting it at about 1598. We got the move back up to retest the top line in this channel, just like we were expecting. That happened. Then, on Friday, we actually got up over this resistance line and just kind of slid back a little bit. But yesterday and today have, for the most part, stayed over this line. Okay, so there's the picture. Upwards channel, downwards channel. And now I want to go back and we're going to look at a little bit tighter chart. And I want to show you why I think we may be forming an inverted head and shoulders here. The reason primarily is the fact that oftentimes your right shoulder on either a head and shoulders top or an inverted pattern is formed on a back test. So here we get a little dip, a big dip, break this line, and then really today was a serious back test on this line. And we should know coming pretty much right out of the gate tomorrow if this line is going to hold as support. Now you say, but Jim, the S&P took out this line at the open. Well, yeah, it did. And there's a reason why a lot of the old school technical chartists will say, look at the close. You know, the things can happen intraday, but a lot of those guys would say it's the close that's more important. I'm going to be honest with you. I'm not totally sold on that idea, but a brief dip below and then a re-breaking of that descending resistance line, and then a trip down to it in the middle of the afternoon, and then a close right on that line today. I think all of those things kind of point to a reasonable expectation that we're getting ready to get a bounce. And if we get a bounce, then I've now identified this line right here as our neckline. So if we get a bounce and take this line out, and might as well say at the same time, take all three of these lines out. Let's just treat that as a resistance zone, if you will, that needs to get taken out. If we get over this zone, then the S&P will be, in all likelihood and with a high degree of probable success, now that we've adjusted this neckline, we're looking now at a target. This is slightly different than what I talked about over the weekend and yesterday. we're looking at a target of about 1696. So guys, that's kind of what we're looking at here. We should know early tomorrow if this line is going to hold as support. Remember, lines that used to be resistance tend to turn into support. And oftentimes that right shoulder on a head and shoulders pattern forms on a back test. We just saw with when we were looking at this topping pattern right here. Well, I need to go to I went to a 15-minute chart. Sorry, 30-minute. Here we go. We made a move up here and then a bigger move, broke this channel, then back tested it. And if you want to call this pattern here a head and shoulders, that's fine. It looks more like a triangle to me, but maybe it sort of works as a head and shoulders. But again, the point I'm trying to get across is the right shoulder formed on a back test of that broken support line. And here with an inverted pattern, if this does play out this way, then the right shoulder is now forming, and we're probably at the depth of it with a back test of this line. Finally, one more quick thing I want to show you, then I'll leave you alone. Interesting to note. I want to just quickly snap a horizontal line on the depth of this left shoulder here, and look where we come over to this right side. So let's see if that holds out. So far it looks pretty good. But remember, these patterns are just pretty little pictures until we get a confirmed breakout. And in my book, that confirmed breakout would be to take out all three of these lines right here. They're fairly tightly stacked. Our lowest one is at 1648, and our highest one is about 7 points higher. Get rid of those lines, and we in all likelihood will be moving up to a minimum target of roughly 1696. So guys, that's your video for June 11th, 2013. I want to thank you for your time, for your attention. I hope you get something out of these. I really do. And I want to thank you also for your support. Take care. Let's see what happens tomorrow.